Good afternoon and welcome back to the channel. So I'm going to try to give a little bit of a different take on this because my opinion on this has evolved over the last couple weeks. Even to just 4 or 5 weeks ago, my mindset about what's going on has changed. Because when I first got in and I had about 3,000 in the market, let's just say that this is how much that was able to buy. 0.08 BTC, half of an Ethereum, 20,000 AMP, and 1,000 Orchid. And that's how much I could buy at that point in time with that $3,000. Now, I wanted the market to take off and I was like, let's go, let's go. I was all ready to, I was all ready to do my celebration, tell all the people that ignored me that they're idiots. And again, this is not financial advice. Do your own research, make your own decision. I'm not a financial advisor, but I was all ready for the celebration whenever it was just going to moonshot and my portfolio was going to skyrocket. But had it done that, I would have still owned the same amount of crypto. The value would have been more, but I would have owned the same amount, big picture. And when we talk about purchasing power, one of the great things about what's happening right now is that inflation is affecting pretty much all goods and services, regardless of what it is, for the most part. Housing, food, gas, everything is going up. But cryptocurrency and Bitcoin are staying the same or going down, right? And that's because of price suppression and manipulation. So purchasing power is the value of a currency expressed in terms of the number of goods or services that one unit of money can buy. Purchasing power is important because all else being equal, inflation decreases the number of goods and services you will be able to purchase. When this skyrockets, we're still going to be working whatever jobs that until we can retire, we're still going to be working whatever jobs that we're working or having whatever source of income that we have. And that for the most part is going to be a fixed number. So let's just say it's $1,000. Somebody has $1,000 a month that they can spend in cryptocurrency. Well, the second that this takes off, that $1,000 that they're able to spend every single month is going to buy less and less crypto. So, I mean, just look at this. If Bitcoin goes down to 25K, people are going to be, oh my gosh, this is terrible, right? But at the same time, look at what you can purchase with $1,000 in BTC compared to what you can purchase at $100,000. So, that same amount of money that you have available, that fixed amount, is going to buy you much more right now than it will when it 3 or 4x's. And, I know this is basic elementary things, and I'm not, this is not groundbreaking discoveries that I'm coming up with here. I'm just saying that, when the market starts to go down, you have every single YouTube channel talking, oh, you got to look at this. This might be it. This might, if it breaks this Fibonacci level, then it might go down and we might be going for a big, down at 15K and blah, 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 blah. But what they don't say is they don't go over the numbers and how the crypto market going down actually increases your purchasing power. Because again, this number is set. My income is pretty much set. My bills are set. So there's only X amount that I can invest in cryptocurrency every month. And depending on where the market is at, depending on how much purchasing power I have relative to how much the market is and how much money I have. So, for people who are just buying and holding cryptocurrency and they're not trading. Now, if you're trading options and you're buying on leverage, whale manipulation and price suppression, may or may not be a great thing depending on what type of positions you enter. But it could actually be a horrible thing for you if you do that, because you could run the chance of it dropping 60% and your amount that you put up gets liquidated. But if you're just buying and holding, which is what most, in my opinion, retail investors are, but that's their game plan. There's a lot of people playing options, but I think for the most part, people are just buying and holding, the retail investors. So again, if the market would have 4x'd, I would have been thrilled, but my purchasing power would have immediately gone down significantly. And big picture, because that's what I'm looking at here, is big picture, looking out 5 years from now. I want to have as much accumulated as I possibly can. Not talking about the dollar amount of my portfolio. I'm talking about what's in the portfolio and the amount that I'm able to accumulate in that portfolio. because again, the thing is, the dollar amount in your portfolio is going to go up and down and all over the place, really depending on the value of the dollar and the amount of inflation that we experience and the overall market need for cryptocurrency and the demand, the supply and demand. So all I'm saying is that at low prices, we are able to accumulate more actual coins and tokens. Yes, if it shoots up, the portfolio will be worth more. We could stake and we would earn more because our portfolio is worth more and all of that other stuff. But it's not going to be that substantial for most retail investors anytime in the near future. Unless you have a very large amount that you can put in and stake and put in these different applications that give you a high APY, that's still, I mean, it's going to be nice and it's going to be additional income, but it's not going to be something so insane to where, people can just quit their jobs off of what they're staking. Now, at some point, it will get to that for a lot of people, depending on where your portfolio is at. But for the most part, people are going to keep their same jobs or similar jobs with similar income or whatever income source that an individual has. The amount of money that they can spend on crypto will largely stay the same, 6 months from now, 9 months from now, whatever it may be. And again, it might go up a little bit because they earn a little bit more passive income through staking, but it's not going to be astronomical until your portfolio goes up to a point to where it's sizable, right? And the return that you get is a sizable amount, not just $50, $100, $150, whatever it may be. So whale manipulation and price suppression, while I hated it when I first got in, and while I was just like, man, shit, I just, every day I was just like, when's it going to pop? When's it going to pop? And then once I stepped back and looked at this big picture, once, as this continues to go up over time, which is what it appears that it's going to continue doing, and all other indicators, in my opinion, point in that direction. As it continues to go up over time, yes, the value is going to be worth more, or the value is going to be more in the portfolio. That being said, the amount of tokens that people own and the amount of coins that people own is going to remain the same. So while it's down, really what they're doing is they're protecting, the purchasing power for all the people that are invested in crypto, who are solely buying and holding. So I know that, again, this is not any type of groundbreaking discovery or anything like that. I just wanted to go over the numbers and really show how, yes, the portfolio can go up by 4x. That being said, the amount of tokens that you own is not going to go up by 4x. It's going to stay the exact same, right? The value is more. So, if once Bitcoin does hit 100K, purchasing power of the dollar, of what you're able to buy is going to go down. So I think that sometimes the wrong narrative gets built around price suppression and market manipulation. I'm not saying it's a good thing. I'm not saying that I encourage anybody to do it. None of us have enough to be able to do it anyways. But it is something that is protecting our purchasing power in the moment, right now. So because inflation has caused everything to spike, almost everything except for cryptocurrency and Bitcoin and gold and silver to some degree. So really what they're doing is they're protecting their own purchasing power and allowing themselves to accumulate as much as they possibly can. But as a natural consequence to that, retail investors have the same opportunity to buy at the same prices, relatively speaking. We don't buy through Grayscale, but relatively speaking, retail investors have the same opportunity to accumulate in the same way that the whales are accumulating. We just have much less money to actually do so. But purchasing power is a relative thing for each individual, right? It's kind of really relative to the amount of money that you have and what you're trying to buy and what you can buy for what you have. And so this is big picture a great thing. And if I could, my portfolio says 12K now, but again, it has so much more there's so much more in my portfolio. And over time, it's going to benefit me greatly that, assuming that this is the future, which I believe that it is. And again, this is not financial advice, but, big picture, when we look back and we say, okay, look at everything that I was able to buy because they were manipulating the price and because they suppressed the market. And again, they're doing this for themselves, right? And there are other big investors who are getting in and want to get in at a low price. But as a natural consequence, we all have the opportunity to do the same thing with the funds that we have available. So I know that everybody wants to see the market skyrocket, and I do too at some point in time. And but if it stays down for another month or two, it is a good thing. It's a good thing. Like when people say, "Oh, we're going into a 3 or 4 month bear market," and they're pitching it as if it's like this, it's like a disaster, and it's not. It's not. It wants you. I mean, if you're not playing options and you're not buying on leverage and you're just buying and holding what you have, this is a great thing, big picture. So and but the narrative gets built around like, oh my gosh, this is just gonna, we're not, it's not gonna move. It's gonna just stay the same or go down all summer and maybe until the end of the year. And if it stays like this to the end of the year, while the main narrative will be that it's the bear market, it kind of sucks. And people can just sit there and accumulate more and more and more and more and more. And but if it skyrockets today, the amount of tokens and coins that you have is going to remain the same. The value will be worth more, but the purchasing power that you have to be able to buy Bitcoin is not going to buy you nearly as much Bitcoin, right? Because it's going to start getting to a point to where the market does reflect the value of the dollar going down. But because it's reflecting in every other really group for the most part. All the other areas, the things that we spend money on a daily basis is going up, 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 up. But the price of crypto is staying the same or going. The most valuable assets out there during a time of massive inflation, the most valuable asset out there is staying the same or going down. So in all reality, we are all benefiting from well manipulation and price suppression. And if it stays like this for another however long, the money that you have available to spend on cryptocurrency is, it's going to be worth more. You're going to be able to buy more. Your purchasing power is going to go up if the price of cryptocurrency goes down. So it's, again, I know that, it's not fun to see your portfolio go down by 10%, but big picture, if you believe that this is the future and you're strong in your conviction, then this is a great thing in all reality. And I think that in a year, 2 years, 3 years from now, we'll look back and we'll say, man, I'm so glad that I had that opportunity for those 2 or 3 or 4 months to accumulate as much as I possibly could. And the market might drop by 50% today. And I'm still going to say the exact same thing because I'm going to buy when it drops down to 50%. So, but waiting for it to have the big, big dip to then buy without accumulating now, in my opinion, it's very risky because there's no guarantee it's going to drop down to 20. It might, and if it does, that's fine. But there's no guarantee that's going to happen. And not accumulating while it is where it is very risky. So that's all I have for this video. Let me know your thoughts in the comment section below. I know this was very basic, elementary things, but I wanted to just try to, relay my newfound, I guess, attitude towards the market and the market being held down through price suppression. So that's all I have for this video. I'm gonna try to put out some more informative content over this weekend on some different applications. If I don't get around to it, it's just because I have other things going on, but I will try to start doing that more and more moving forward, so I'm not just sitting in my car and running my mouth. So that's all I have for this video. Please like, share, and subscribe. And yeah, take care and have a good July 4th weekend.